We have Danny Fava from Investnet.com, and her topic is social megatrends shaping personal finance. Now, don't forget, this is a live event, and we'll be answering your questions at the end of this session. So please put them in the chat box as we go. And with that said, I'd like to turn the reins over to Danny. Hello, Danny.
Hello, everyone. Thanks for having me. I'm so excited to talk to you all about social megatrends and how they're influencing not only fintech, but also investing. So first, let me click through and get to my disclosure slide. And while that's popping up, I will take a moment to introduce myself and just tell you a little bit about me and my background and what I do. But I'll keep it quick. And if anybody wants to know more about me, feel free to ask in the questions. I'm an open book, and I'd love to answer whatever questions you all have. So first of all, I would consider myself having taken a non-traditional track into finance. A story that I love to tell is that my dad grew up kind of poor. My dad always used to say, money goes to money. And I really and truly never understood what that meant. And so I decided to major in finance. I figured if money goes to money, then perhaps I should be around money all the time. Now, though, I know and I understand a lot better what that phrase means. And it really, one of the things it means is compounding. And there's many different ways to compound your money. The more money you have, the more of a compounding effect you're going to have. And those two ways to compound money, or two of the ways to compound money, are interest on savings, which is very low these days, and investing. And I'm going to talk a lot about investing. As the head of strategic development at Investnet, a company that has a lot of technology solutions for financial advisors, it's one of my jobs to keep an eye on what I call social megatrends. So these social megatrends, I will kind of talk about them from a lens of how they impact fintech and how they impact investing, and actually how a lot of folks use these social megatrends in their investing strategies. Nothing that I say should be misconstrued as advice. I am definitely not giving you investment advice today. I'll simply be talking about the social megatrends that I see happening in the marketplace and how that's impacting innovation and companies that may be publicly traded. So what are social megatrends? Social megatrends are changes in everyday behavior that occur at scale. So these are things that I see a lot of people doing, perhaps even a whole generation of people doing. I now part my hair in the middle, as the millennials and Gen Z have let us know that this is the way we should part our hair now. That's a trend, perhaps not a social megatrend that is impacting investing, but certainly a trend that we see having a generational impact. So these social megatrends have accelerated in recent years. Things are moving very, very quickly. And the pandemic has caused them to move even quicker. And we'll get into some of that. And then we'll talk about how we're seeing the biggest trends. And I'm going to talk about four of the biggest trends and how they're impacting fintech and investing. But first of all, I want to ask you a poll question, and I have a couple of these throughout the presentation. The question here is really simple. What do you think this is? I'll give you all a couple of moments to answer that. What is this very strange and odd object, and why am I talking about it? So let's see if we have some poll results there. They're a little small and hard for me to see, but I know what the right answer is, and I'll tell you the right answer. This is a store display of a pantyhose distributor. And the reason why I'm talking about this very odd phenomenon that happened in the 80s was because a world famous investor used that pantyhose display to decide on one of his most successful investments. This world-renowned investor, his name is Peter Lynch, and he ran the Magellan Fund. He grew that fund from $20 million to $14 billion over the course of, I think, 13 or so years. The reason why he noticed this store display was simply by observing behavior. He was in the supermarket one afternoon on a weekend with his wife shopping, and he noticed not only his wife, but a bunch of other people walk up to this odd display and start buying these items, which were in these egg shapes, and they were pantyhose. He watched this phenomenon happen before his eyes. The pantyhose sold out. And then he went to work on Monday and he told his team, hey, go review this company called Hanes and let's see if this will make a good investment based on what he observed, based on behavior that he saw happen before his eyes. And this was really his investment philosophy. It turned into his investment philosophy overall, which has changed a lot nowadays because of technology and social media and the way we observe behavior. But the fundamentals of his investing strategy still remain true today. What I call this is social or behavior trend investing. So it's investing in companies based on an overall behavior change observed in society. It's what you're seeing happen online. It's what your friends are doing. It's what your family is doing. These are kind of overarching trends that are really starting to change the way people interact. This is different from fundamental investing. And there are many different kinds of investing, and none of them are right and none of them are necessarily wrong. And some of them are better at some times and some of them are better at other times. But the point is, there are many different ways to look at investing and to decide what companies you want to invest in, what companies you think are going to be successful in the future. This one I call social or behavior trend investing, which is investing in companies based on those overall behavior change you're seeing in society. Fundamental investing is just one other example of investing, which is investing in companies based on their economic or financial fundamentals, which means looking at the numbers, looking at financial statements, looking at the health and growth of the company, the revenue, looking at the competitors and the general economy that might be affecting the stock or the company. So now let's take another poll. I've given you these two types of investing trends or investing philosophies. Which one do you consider yourself to engage more in? And if you don't currently engage in investing at all, but you want to and you're interested in it, which one of these would you rather partake in, rather participate in? Social behavior trend investing or fundamental investing? Let those kind of results tally in, so we'll see where everybody kind of lands. I know for myself, I do a little bit of both of these, but I do find the social behavior trend investing to be more fun. So it looks like we have a lot of fundamental investors out there. That's great. I can tell you this, it is fantastic to be able to combine two of these types of investing with each other. Okay. So, and the other thing is you don't have to know everything about either investing philosophy to partake in investing. So let's go forward and sort of talk about what the trends are. So I'm going to kind of get into what are these four social behavior trends that I'm seeing out there in the space, and we'll dig into some, and I'm going to give you some examples of companies that are following the trend. The four trends are decentralization, measuring wellness, the age of the creator, and the involuntary tech revolution. So let's dig into each one of these, and I encourage you, as I'm talking, be thinking about ways that you've seen these trends take place and perhaps other companies that are participating in one or more of these trends. So first, decentralization. That's a mouthful. And I've also heard this kind of referred to as the great separation. And I think this trend has been happening over the course of 20 or more years. I can trace this one all the way back to music. The first thing that I saw decentralized was albums when we broke them out into songs. That was a form of decentralization. But then the snowball kind of rolled down the hill and got bigger and bigger. And now it's impacting all the way down to how we work. right? So it hit television. We went away from linear cable and started streaming individual channels. Then it went into education. It seems that a lot of people are more engaged in a master class versus a master's degree, another form of decentralization. Then it transferred into work. So a lot of people are in the gig economy now and view traditional careers a little bit differently. These are all forms of decentralization. As you can see, I have a bunch of different companies that I think are sort of aligned with the trend. Here's some stats for you about decentralization and how they're impacting our society. College enrollments were down 2.5%, and Masterclass had just raised at that time in 2020 $100 million funding for their projects. In 2017, 55 million people in the US are considered gig workers. 55 million. That accounts for approximately 34% of the US workforce considers themselves gig workers. This is a big fundamental shift, and a lot of companies are benefiting and are taking advantage of this trend. So here are some of my kind of like favorite examples of this trend. Lemonade. Okay, so what does Lemonade have to do with decentralization? Well, in the past, you'd have to go to an insurance salesperson, a big incumbent insurance company to buy a big insurance policy. Now, Lemonade comes in and says, hey, we have this real simple way within minutes to get insurance on anything you want, including your apartments, perhaps, which is somewhat new in the traditional insurance marketplace. So Lemonade has been decentralizing insurance sales, insurance access, and the things you can insure. And I've put on the screen everybody's favorite thing, a chart that shows the price movement of Lemonade over since its IPO, which happened mid last year, and how it has performed versus some traditional, let's just pick two traditional insurance companies that you may have heard of, Allstate and Progressive. Another form of decentralization, which I think you guys are probably familiar with, really familiar with, is cryptocurrency, Bitcoin, right? That is a major form of decentralization. We're actually decentralizing fiat currency. That's like the US dollar. We are decentralizing it, or the point, the philosophy behind Bitcoin is that the control of money and the value of money would be better in the hands of the people versus in the hands of a central institution. That's the philosophy of Bitcoin. Whether you believe it or not, Bitcoin is one of the biggest examples of decentralization that our generation has seen. So I will just ask a question now, another poll question, because I'm curious and I have you guys all out there, and I think you should all know this about each other perhaps. Do you own any cryptocurrency? So is part of your investment philosophy, or part of what you're investing in, is it cryptocurrency? And cryptocurrency is also really accessible now, meaning even, and part of the rationale for Bitcoin is also to get it in the hands of the unbanked. So Bitcoin is one of the most accessible things we've seen. Pretty much anyone can invest in it. You have to download an app and you'll have access to Bitcoin or any cryptocurrency. So let's see, it looks like, I think it's so small for me. You guys can see it better, but it looks like most of us, yes, I can't see if that's yes or no, or a lot of us are owning, investing in cryptocurrency. So a lot of us here are participating in this decentralization trend through the use of this different kind of currency. Oh, thank you. The top one is no. Thanks. Okay. Well, still looks like a lot of us are, but some of us are just learning about it, which is cool. Let's move on and look at measuring wellness. This is the second trend. It's one of my favorite trends. So I think most of us here, I don't even have to poll on this one, are doing some form of this in our lives. Becoming well is a trend in and of itself, but measuring wellness is really where I see a lot of companies focusing and building solutions, because what you can measure, you can track, and what you can track, you can improve, right? So a lot of companies are sort of trying to figure out how to create better devices, better tracking mechanisms so that we can all measure things. And this goes from fitness to sleep to meditation, eating well, budgeting, right? So we have all of these different ways to measure wellness. And then this trend, I believe, also extends into making the world a better place. So one of the newest things that I've seen in this trend are companies that are helping you measure your personal impact on the world, companies that are helping you figure out which other companies are also trying to make the world a better place. And that's also kind of become its own investing strategy, investing in companies that are making the world a better place. So, talking about measuring wellness, here's some stats for you. 40% of people plan to pick up meditation or yoga. That would have been unheard of 25 years ago. 40% of people plan to pick up meditation or yoga because we are so invested in our mental health. And thankfully, there's a lot of companies trying to create solutions for mental health, because this past year has affected everyone so much. And it's so great that companies are trying to help people get through these times. It is a trend in and of itself. Downloads of fitness and health apps increased by 47% in Q2 alone. 47%. That's an incredible increase in fitness apps that have been around for quite some time. So what's driving these increases? It is clearly this hunt for wellness and measuring wellness. So here's some others. Noom quadruples revenue again to 237 million. And then you see traditional companies like Google, these big tech companies, really wanting to participate in this trend, in this measuring wellness trend. And we saw Google buy Fitbit for $2.1 billion. So that's another way that this kind of wellness trend impacts investing, is that you see these traditional tech companies also going out there and making acquisitions to make sure that they're on the right side of measuring wellness. Here's a chart. What's one of my favorite companies to look at, think about, talk about, and how they've entered the space is Peloton. Peloton shares, they briefly fell as Apple announced its cheaper rival fitness service on December 14th. But you can see the performance of Peloton has been very good over the course of the pandemic. So why did they fall briefly as Apple announced their cheaper rival fitness service? Well, this is another thing, right? What I was just talking about is these incumbent tech companies, the existing big tech companies getting into the game, right? So they're either acquiring or they're creating their own type of solution for fitness and measuring wellness. And Apple actually affected Peloton's entire stock price by announcing that that enhancement, that service. And here's the other thing that I mentioned briefly about measuring wellness. It's becoming an investing strategy in and of itself. So there are companies out there that are allowing you to put your money to work for the good of the world. Aspiration and Betterment are two companies that come to mind. Aspiration combines spending and investing, both aligned with your values, letting you know what your carbon output is. Betterment, who's a company revolutionized digital advice, shifted to values-based positions and released socially responsible investing portfolios, which is a big move for them. trend. What does it mean? We as people want to create content and consume content from other creators. Here are some companies who are really benefiting from this trend. Besides TikTok, we'll talk a little bit about TikTok, which is clearly the biggest beneficiary of this. But there's Etsy and Redbubble, who are marketplaces for creators to sell their creations. There's Pinterest and HDTV. And then there's the concept of influencers. And here's one that I really think fits into this trend: Elon Musk versus Tesla. Elon Musk has something like 10 times as many people that follow him versus people that follow his company. What does that mean? It means that people follow people, not brands. So not only are we as a society craving to create something, and we want the ability to create, and we want a platform to show and sell our creations, we're also craving the creations of other people. So let's talk a couple of stats about that. TikTok, the number one downloaded app of 2020. No one should be surprised about that. But I think there's a change rumbling in this creator market, and I'm going to ask you guys about that in a second. Large cable and satellite companies lost about 5.5 million traditional pay TV customers last year. 8% decline. That's very big. Why? Because a lot of people are just watching YouTube now. They want to forego TV and the big productions in lieu of, and this is especially relevant in very young generations, in lieu of watching creators that you can connect with. Recipes and cooking videos saw a 45% surge in views in 2020. That's probably fueled by the pandemic and not being able to go eat out. But I think this one is here to stay. We're craving more of the ability to create, and we've seen a lot of companies that deliver the ingredients to your doorstep kind of on the rise because we want to put it together ourselves. So that kind of goes with the trend. And here's everybody's favorite thing: the chart of performance on two companies that I would consider marketplaces. Both of these companies are marketplaces. So let's take a look at their performance over the course of the pandemic, where we have Etsy versus Amazon, right? Etsy is out there selling people's creations, and Amazon is out there is the seller of all sellers. So look at those two performances. They kind of speak for themselves. So before I leave here, I want to poll you on one other thing. Here's the change that I see rumbling in the creator space. There are some apps, Clubhouse is one of them that's talked about doing this, where you can tip the creators you follow on social media. This is a way for another way for creators to monetize, right? So a lot of creators and influencers are monetizing by getting ads. They run, ads, and they use products, and they show the use of those products, and that's the way they monetize. But here's a new way that platforms are really trying to enable creators to monetize their creations via social media. So I'm curious, would you consider tipping the creators you follow on social media? This is one that I'm really interested to know. I don't know if I would, but I'm probably older than some of you out there. So let's see what you say. Brian or Eric, I might need you to give me the answer. I can't see it, and I'm really curious on this one. Okay. So leaning toward no way, but I think we have enough people that would think about it or would definitely do it that it may be a viable market. Very curious to see how that one progresses. So let's get into the fourth and final trend. This is what I call the involuntary tech revolution. And this is one that has affected us all. And this is what has happened over the last year. probably impacted the older generations more than the younger generations. I would think the younger generations were already adopting a lot of these. But for the older generations, what the pandemic did was it forced adoption of things that people never thought they would use. For example, grocery shopping online, Instacart, ordering food from Grubhub, DoorDash. Not only has that trend fueled the growth of gig economy workers, so kind of bringing together decentralization from the very beginning with this trend, so many people, myself included, probably would have never considered food delivery online. But the pandemic kind of forced us into it. I know people who are older than me who would have never thought about going to deposit a check via their phone. And the pandemic forced them to do that. Of course, mobile entertainment has grown. Can't go to the movies anymore, can't go to a concert, got to adopt these things. And then exercise has drastically changed. Peloton, which we saw before in our other trends, Mirror, Moto Yoga, all of these things have grown substantially while our traditional in-person commercial gyms have kind of stalled. So what does this mean? The pandemic's going to be over soon, we hope. How will this trend kind of move forward? And that's where I like to say that once the mind expands, it can never go back. So my true feeling on this is that now that we know we can do things digitally, there's been a level of trust that has been built in these digital systems. There's been a level of habit that has been formed through exercising at home, through consuming entertainment digitally. Sure, a lot of us can't wait to get out there and get back into a concert, but there are many things like meeting with a doctor that now you know it can be done online. You probably don't want to have to go back and wait in a waiting room in person, right? So a lot of these things have changed the way we trust, the way we view experiences, and the way we consume them. And I think a lot of these behaviors are here to stay. So let's just look at a couple of stats first. Everything's digital. And for some, the pandemic forced this technology adoption. So Peloton's global membership base hit 3.1 million at the end of June 2020, more than double a year earlier, thanks to increased demand for at-home workouts. And Instacart saw order volumes increasing 500% year over year. App downloads up 218%, just crazy. And then, of course, Uber, an existing company, decided to launch grocery delivery in New York City to pilot that because everybody's seeing the trends, wanting to take advantage of the trends and pivot wherever they can. So here's another one, investing in the involuntary tech revolution, a chart of stock performance for these publicly traded companies. Microsoft, Salesforce, strong performance for sure. Strong companies. But look at that compared to Zoom throughout the course of the pandemic. That performance was something that you definitely don't see very often, right? And that's just in line with the involuntary tech revolution trend. There are many other companies and examples of people companies who have benefited from this involuntary tech revolution. And I think the other thing that the involuntary tech revolution has done is it's really made companies focus on their digital experiences. My goodness, if they didn't have a great app before this started, they're certainly looking to create a great app now. So a couple of other things before we get to questions. How are the trends showing up in investing itself? So this is something interesting too that I've noticed. I'm not talking about publicly traded companies to invest in who are following the trends. Here, I'm talking about the actual physical act of investing. Like, how do you open up an app and trade? How do you buy securities? How do you buy real estate? How do you buy other things? Even that has changed because of these trends. Here's some examples. There's this app called eToro that allows users to trade. But the core feature of eToro, which is different than other trading apps, is that you can follow and copy other traders. Not saying that that's a great idea, but it is definitely aligned with the trends. Sounds familiar, right? That's the age of the creator. We crave the creations of other people, of peers. So eToro is plugging right into that trend and is changing the way some people invest. Fundrise. This is a really cool one, and I would say this is more around the decentralization. Typically, historically, if you wanted to invest in an apartment building, you would have to be very wealthy and go invest a lot of money and then buy an apartment building, or go in with, a couple of other people who are funding it and create a private entity to invest in that apartment building. Fundrise has changed that game, and it's contributing to the decentralization example or decentralization trend. Using Fundrise, you can now invest a small amount of money in a bigger pool of real estate through their app. And there's several other apps like that. My last example is Rally Road, another one of the apps that I find very fun that I'm using. They're decentralizing ownership in rare goods. So they'll take something like Michael Jordan's sneakers, that he wore in his rookie year. They'll securitize them and they will sell shares of them on their app. So I think they're leveraging that decentralization trend, but they're also leveraging the age of the creator. Because guess what? I want to invest in that partially so that I can show my friends that I own a part of Jordan's sneakers from his rookie year. So I really think they're leveraging both of those trends and creating a really cool, compelling solution. So these mega trends, and I'm not sure how much more time I have to get into this before we go to questions, but these mega trends are showing up within other areas of finance and investing also. Some of those areas are investing itself, which I talked a little bit about. Oops. Let's see. Oh, I think maybe I went all over these already. Let me just take a quick look here. Insurance. Yeah. Okay. Sorry. Got a little turned around there. So they're showing up in insurance as well. 29% of American adults intended to buy their life insurance online. 42% of survey respondents have used telehealth services since the beginning of the coronavirus pandemic. 42% have used telehealth services. That's something that they can leverage now, which is not going back and is really changing insurance, right? A lot of consumers, a lot of health insurance companies also are really hurrying up to change the way that users access them, because now so many people are comfortable doing it via telehealth, video conference, online. Let's take a look at some companies that are specifically changing the game in insurance. You have Oscar, that's one, personalizing health insurance. Their tagline is exactly in line with the decentralization trend. We didn't create Oscar because we liked health insurance, quite the opposite, right? So they are out there saying they're going to disrupt insurance. And then you have Hippo, more than home insurance, it's home wellness, right? Think about that. That's right within line of the wellness trend. Easy, accessible, modernized coverage for the digital age. It's like they pulled all of the words of the trend and made it their mission statement. Really different, exciting companies that are popping up, making things more accessible and more relevant for this generation. How the trends are impacting lending. During the pandemic, both Amazon and Apple launched pay later options. Buy now, pay later is a huge part of the decentralization trend. Fintechs originated 49% of all unsecured loans in the US, up from 22% in 2015. So that's more than double fintechs, okay? We're not talking about the traditional banks and mortgage companies creating loans. We're talking about fintechs, companies that you can pull up on your phone via an app. Here's some other companies that are really changing the game in lending, creating personalized and easy solutions, driving financial wellness. Prosper. Prosper is an example of a company that enables you to become a lender. You personally can become a lender, and you can put your money to use lending it to people that align, or causes that align to your values. Okay, so that's kind of taking that GoFundMe idea to another level. It's not just donating money, it's actually an investing opportunity. So you can take your money and go out there and invest, lending it to peers and causes that align with your values. Then we have a company like Bread, and there's also Affirm and so many other companies that have come in with this buy now, pay later, which is another lending solution. This market, all of these markets, lending, investing, insurance, finance, are all moving so quickly. So many firms coming in and really leveraging these trends to innovate. I know I have some more. I'm coming really close up on time. I think I will stop the presentation now and go take some questions. Hopefully we got some questions about the trends, about how to put them into your investing philosophies, and about what you guys are seeing out there.
Yes, well, thank you, Danny. And we definitely do have some questions, and there's still time. If you would like to ask a question of Danny, please put it in the chat box right now, and we'll address it. So this is a live Q&A as we are doing our digital conference today. So to start off with, the first question that we have, one second, they just moved it on me a little bit here. All right. So the first question is from Adam Smith, and Adam Smith says, what do you think will be the biggest trend in investing in 2021? Putting you on the spot, Danny, right away.
What do I think the biggest trend in investing will be in 2021?
That's correct.
Okay, so I think the biggest trend, and I'm going to go broad here, I think the trend is going to be to individual security ownership. And so that's, a lot of what I talked about today is around, identifying companies, identifying trends, companies that align with the trends. Historically, a lot of people have invested in ETFs and mutual funds and have kind of avoided the individual stock ownership because it's not diversified, and people really want to diversify the portfolio. It's a very smart way to invest. But I also think that when I look at all of these behavioral trends, I see people really craving individual stock ownership and really craving kind of that I want to invest in companies that I know and I like and I'm aligned with. And now there's so much innovation happening with fractional share ownership and the ability to take any amount of money and invest it in one company. I think that people are going to pick a list of companies, and that's really aligned with the trends, and I think that'll be one of the biggest trends in 2021.
All right. So this one kind of goes along with that question, so it feeds off of it a little bit. This one's from Michael, and Michael says, would you say that index fund investing is a form of fundamental investing, or is it something else entirely?
Okay, yeah, that's a great question. So index investing, and that really means, it can mean a couple of different things. You can do index investing a number of ways. You can do it through buying an ETF. You can do it through buying a mutual fund, or you can do index investing by buying a list of securities, like the whole list of securities in the index, or a shorter list of securities that mirrors the performance and risk of the index. Okay, so what is index investing? Is it fundamental, or is it trend investing, or is it something else? I think I would call that like a holistic, diversified investing approach. You kind of take an index and you replicate it, or you invest in it, and that index is a long list of companies. So what you're really trying to do there is get some diversification in your portfolio.
All right, and we're going to stick with the theme here. So we have Jose, and Jose is asking, Are there any major types of investing, social slash behavioral versus fundamental, or anything else that comes to mind for Danny?
For me personally, how do I personally invest?
Well, no, not necessarily personally. Just saying, what are the other types of investings that you like to focus on?
Yeah, well, I love talking about impact investing.
Hmm.
That is also a new trend and will be a very big trend in 2021 also. And that can be combined with any of these that we're talking about. And what impact investing is, it's focusing on companies whose core values align with yours. So they're trying to make a positive impact in the world. And I really love the way that this kind of new generation is focused on that, is thinking about that. I love, vote. It's to me, it's voting with your wallet, right? It's you are making a decision to put your money where your beliefs are. And actually, there's an alpha case for that as well. A lot of people believe that companies who are doing the right thing in a lot of different ways will perform better than companies who are not focused on doing the right thing. So impact investing is another one of my favorites beyond kind of social trend investing. So thank you for asking that question. Appreciate that.
Yeah, excellent question and excellent answer. I really liked your response to that overall. So now we have Connor, and Connor is asking, is there a way or studies being done that see how these trends are changing into new norms in our society? That's putting you on the spot, Danny.
I don't know of a study that I'm sure there are a lot of behavioral studies at how these trends are becoming our new normal. I actually think normal is sort of almost an obsolete word at this time. What is normal anymore? But I don't think there are any studies that I know about that I can point to, but I can tell you that I would be very interested in reading one. So definitely, if anybody has an idea, feel free to tweet it at me at ENVDanny. I'm constantly checking my Twitter, and I'd love to read any report you guys come across that describes these trends playing into our new normal.
All right. Well, we have a few more minutes left, so please keep these questions coming. The next one that I have, a little bit similar to what we've just addressed. This one is from Future Teller 77. How does investing in social megatrends fit into a regular portfolio of stocks and or bonds?
Yeah, great. Well, first of all, I love your name, Future Teller. That's fantastic. So how does social investing fit into your regular portfolio? I mean, I think these things should be applied overall, right? So you should be looking at social behaviors as well as company fundamentals, as well as economic factors, and really making kind of decisions to if you want to create a portfolio using all of those in combination. And that's kind of what I was saying at the beginning, that there really is no right or wrong way to invest, whether you're leaning towards fundamentals or you're leaning towards social behaviors or you're leaning towards impact. I think the best thing to do is to sort of understand all of them and invest that way for your whole portfolio. Now, that's there are people, a lot of companies out there who will help you do that. So you don't, it seems so overwhelming to say you should look at all of these things and learn all of these different ways to invest. There definitely are, and Ally Invest is certainly one of them, who can help you just plug into a portfolio that is doing all of that for you, right? So I do think that individual security ownership is a trend, and people want to do this on their own. And I think there's always a place for that. But when we're talking about investing and getting this holistic view of all of these ways to invest, there's help out there for you in professionals who do this for a living.
All right, Danny, we do have a few minutes, and I actually want to hear this question answered by you two. I have the same question as Jessica. Jessica says, Danny, what do you read daily to stay on top of trends and new companies?
Oh, I love it. So I subscribe to a lot of different things. MIT, TechCrunch, CB Insights. I love Twitter. Twitter is like my go-to. I've got to scroll through Twitter all the time to hear everyone. And I think the most important thing when you're thinking about using social media as research is not to create an echo chamber. So you don't want to follow people who are only interested in the same things you're interested in and who only have the same points of view that you have. You want to follow and read and listen to people with all different points of view, all different kind of professions. And I think that's kind of the best way to consume and to learn. But I definitely do subscribe to a lot of good newsletters that I read every day.
All right, Danny. Well, it looks like we got time for one. Maybe we can fit in another one here too. This is from Jay Garcia. Clearly, the pandemic has caused a lot of these huge trends, and we don't want to go down the road too far on this one. But do you see the political situation causing trends as well over the last couple of years?
I see that trends have impacted the political situation as much as the political situation impacting trends, actually. There's this real desire, and I'll go back to the age of the creator trend. There's this real desire now to be very upfront and outright about what we're thinking and what we're feeling, and kind of that's great. Everybody should feel empowered and enabled to talk about their thoughts, and that's kind of in line with the age of the creator trend. And it's something that I think that everybody's kind of realized is their right, and that's kind of fueled a lot of what we've seen happen. Just that being upfront, out loud, having social media, having a platform, just a lot of different people having a platform. So I love that question, but I would almost say it the other way. The trends have kind of fueled a lot of what's been happening.
Okay, Danny, that's all we have time for. You want to throw out that Twitter handle one last time here?
Yeah, you can reach me at ENV Danny, DANI. Love to hear from you guys. Thank you so much for the time today. This was a lot of fun.